because the markets have been going through these wild gyrations.
Right.
Don't seem to have a clear sense of what direction is up. How do you interpret that as somebody who's spent a lot of time playing the markets?
Put on my, manage the portfolio trader hat, and not so much a trader, but manage the portfolio. It's great, anytime there's volatility and any time there's change, there's opportunity. Now, I say it's great because I've taken a whole different approach to investing than most people. I think buy and hold's a crock of shit. I think, the idea that you always have to invest your cash is not far behind. And so I've always been of the attitude that unless you really have a commitment to something, just keep your money in cash, knowing that at some point in time, there's going to be a week or two like we've had.
But how much time, you've got a lot going on in your life. How much time do you have to actively manage your portfolio through these 500-point market swings?
Well, see, that's the whole thing. I don't have to spend much time until it hits the fan. Right, so I don't. I mean,
a lot of hitting the fan this week.
Well, that's exactly right, and that's where the opportunity is. Like, I wouldn't look at my portfolio, or I get a one-line, one-number statement every day from my bank, and that tells me if anything weird happened, and I wouldn't even look at it. But then when everything starts getting crazy, I call it the World Series of investing. That's when you start digging in, and it's because of the approach that I take. So, back in 2006 and 2007, I was writing blogs saying, look, the stock market's for suckers. You're getting put, when you sit down at the business table, you always look for the sucker. And if you don't see it, it's you. And you've got all these professional people on the other side of the trades. When I started trading stocks in the early 90s after I sold my first company, you could understand different elements of the market better than the professionals. So I can understand, new technology from Wellfleet and Synoptics and all these old technology companies better than the traders. Today, there's so much money in these huge hedge funds, and then they have such professional research and in-depth research, there really aren't any advantages for the individual traders. And so my approach has always been, unless I know something specific, put it in cash. And so
what are you investing in? What are the areas that you feel
What I did in 2008 and 2009, I put everything into MLPs and MREITs, mortgage-backed securities, ones that I thought were the better companies, and I just piled in. And I also piled into Australian bonds because I thought the economy was good next to China. It was my way of playing China.
So you make one-way bets. This isn't portfolio balancing you're talking about.
No, all that asset management, diversification, that's for idiots, right? Because you can't diversify enough to know what you're doing. Right? I did my homework on Australia, right? I did my homework on the MREITs. I did my homework on MLPs, and their pricing had just gotten crushed.
So what are you doing right now?
So what I did right now, I'd been going all the dividends and everything. I just put into cash, and so I don't think stocks have fallen enough to just to say any particular stocks are cheap. Right, so when I looked at the MLPs in 2008 and 9, they were paying 18, 19% for companies that had never missed a payment, right? Had always put out all their cash, and they looked dirt cheap. Now, you look at good companies, Apple hasn't fallen that much, and just to be down 10, 15% from their highs, they're still not as low as they were 18 months ago. And so what I did was, I said, there's going to be a lot of volatility. So I bought, took a little bit of money and bought out of the money calls on the spider calls. I bought on the Standards & Poor's, the SP 500, and then I did the same thing on the diamonds, which is the Dow Jones. So I bought those long when the stock prices cratered, and then when we had the big, not today, but the big run up before, I bought a bunch of puts, knowing that even though I was paying for a lot of volatility, that I thought there would be a lot of swings in the market. And so
you're just betting on volatility.
I'm just betting on volatility.
And how long is that going to last, in your view?
No idea. And that's the whole thing, right? People aren't buying intrinsic value in companies anymore. The whole Warren Buffett approach works great for Warren because he can put $3 billion into an investment and take a whole different approach than John or Sally Doe investor who can't do that.
Yeah,